Hello, everyone, and welcome to Capital One's CapXTalk on navigating disruption in the middle markets. I'm Art Kleiner, Editor-in-Chief of Strategy and Business, the management magazine published by PwC, and we're coming to you today from Capital One Labs on Fifth Avenue in New York City. I'm happy to be joined by a panel with experience, expertise, distinction, and opinions about disruption. And our panel members are, to my right, Jim Rothberg, General Partner at Route 66 Ventures. This is a private investment firm focused on opportunities in venture capital and credit. Jim founded and is growing Route 66's credit business, which makes asset-based investments in the specialty finance sector. He has more than 25 years of experience operating entrepreneurial firms and leading large, complex finance functions at major financial services companies, which means that he's seen disruption from all sides. We're also joined by Anat Lechner, Clinical Associate Professor of Management and Organizations at New York University School of Business, Stern School of Business. Anat's research focuses on change management and high-performance cross-functional teams, and she is also studying the design of workplaces and how that affects performance and effectiveness of organizations. And she too has looked closely at disruption and its impact on small and large organizations. And lastly, we have Dave Kucera, who is head of the Financial Institutions Group at Capital One Commercial Bank. He and his team provide recourse and non-recourse financing, securitization, capital markets, fundraising, advisory, and a range of other services to companies who are involved in financial services and asset management throughout the U.S. across a broad range of sectors. So Capital One Commercial Bank recently released a report on middle market disruption, which this event is tied to, and which you can find at capitalone.com/commercial. I'm sure we're going to get to some of these findings, but I'd like to start by asking sort of the question that I think may have brought people to this event in the first place, which is, what do we mean by disruption, and why is it important to leaders of middle market companies? You want to begin?
Rock, paper, scissors. Yeah, I'll start. Broadly defined, I think about disruption as being any development that fundamentally changes and improves the products and services that are available to customers, or the way those products and services are delivered to customers, and fundamentally change the customer's experience. So that's a broad generalization, but generally, middle market companies, like any company, if they're going to survive and thrive in the future, then they need to be prepared to adopt to a new world of new improved products and services, or they're going to ultimately shrink and die in a worst case.
I typically think of it as I distinguish between two conditions. It's not that I distinguish. I think we distinguish between two conditions. There is the condition called evolutionary process or evolutionary change. And by nature, it's incremental. It's one step after the next. And as such, it's also easier to adapt to, because it's within the logic of the paradigm. It's within the logic of what you've done. And then there are moments where those incremental progressions get, we'll call it, disrupted, and a revolutionary change begins, and that shifts the paradigm altogether. So you can think about evolutionary processes, and they are incremental, and as such they might be improvements and innovative in nature, but they do not disrupt. What disrupts is what comes and shifts the paradigm altogether. So if once upon a time we were medicating everybody pretty much the same way because we didn't understand who you are. And now we're able to have a deep understanding of your genome, your makeup, and so forth, right? We can medicate you specifically. That's disrupting the paradigm of how we medicate people. And so I think disruption is tied to what is revolutionary by nature. And today I think we are at the cusp. We're actually quite lucky people because we live through time of disruption when we rewrite the world, I think. And so that, I don't know if it's a definition necessarily, but that's my way of thinking about this or talking about this.
What do you mean by rewrite the world, Anat?
I think that, once upon a time you had an apple and now it has to be a smart apple. Once upon a time you had, you were dating someone and now it has to be smart. So there are algorithms that direct how you're going to do that. I think we literally rewrite the world on pretty much everything. Once upon a time you got into your car and you drove someplace. Now you're going to get into your car and it'll drive someplace. We're rewriting everything about the world, and I think that's a pretty disruptive time. That's why people coined that now as the buzzword.
Dave?
Yeah, I think we're living in a very interesting time because disruption has always occurred, but I think it's occurring a lot faster for a number of reasons. And there's been a few books written that maybe a lot of things happened 10 years ago when the Great Recession occurred, and arguably the most important things that happened weren't the Great Recession. It was data becoming almost free, the ability to transmit data efficiently, wirelessly, as well as through wires, much faster than what happened before. And just technology revolution, whether it's kind of the Intel version of Moore's Law, where we're trying to basically have huge transformation every year and a half. All of that came together around 07, 08. So that's why the iPhone does all of the amazing things that it does, and that's why it came out in 07. And if you look at kind of what's going on across almost any industry, there is varying levels of change, and change has always happened. And if you're trying to run a company, it's been easier to stay on top of that change. And if you're trying to run a company or think about a company today and pick an industry, all those industries are changing in many ways, whether it's retailing, whether it's Amazonization, that's not a word, maybe it will be eventually, and they bought Whole Foods a week or two ago, and what that means, and they don't have a big percentage of total sales in retail, but they have a big influence in what's going on in retail. If you look at our world, financial services, there's huge change going on. If you look at Uber and Lyft and car sharing or home sharing, whether it's Airbnb, basically sharing of assets, that's transforming big industries. And so those are just a few examples, but every industry is going through transformation, and some are going through huge transformations much faster than they ever have. And if you just think of one additional company, what's going on out in the West Coast in the auto company, Tesla is trying to make 100,000 cars a year. It doesn't quite yet. That's less than 1% of total sales. But if you look at their market cap, they're one of the most valuable auto companies in the whole market, even though they have less than 1% market share. So I don't know if that's disruption, but it's certainly the market saying there's something interesting going on. And so if you've got a company and you're trying to figure out how to manage it, I think it's a really interesting and challenging time right now.
So let's hone in for a minute. Okay, so we know that, so we're talking about massive sweeping change in products and services, in the business model or the paradigm that companies have, and in the sort of entrance into markets and what they'll do. And we know that, all of us individuals, us consumers, financial consumers and grocery consumers, we're probably going to be served well by this when the dust clears, we hope. Mm-hmm. And, we know that the large company leaders are eyeing this, unless they're Jeff Bezos, with a certain amount of trepidation and concern. What about the small and medium-sized companies? What about the middle market? I mean, should they be confident now that they have a foothold where others didn't, where they didn't before, or is this like a wave that they should be really wary of? I don't know. And not your...
I can get us started. I think it's a tough question. I'd say this: if I was running a middle market company, I would be very deeply concerned. And the reason for that is the business model. I think you spoke about changes across industries, and indeed every industry gets impacted. And the way of the future is already showing us something that gets enabled by high-level technologies, we'll call them, new generation technologies, and specifically artificial intelligence, which I think is the, at least to me, the mother of all technologies. And that has dramatic implications to us as people, and it has implications to the way we conduct businesses. And so when the large companies are building the capacity to act with artificial intelligence, and they do, advancing it into every area of their business, creating predictive analytics that understand how we consume, what we will consume, what we like, and are able to go directly to you. I don't know what the middle market is doing anymore. What is their niche? Unless they come in and they say, we get the artificial intelligence issue covered, and we have a delta to value to add on top of that, which perhaps, because we're smaller, we're able to perhaps add value on the person-to-person interaction. Because we're smaller, we know our customer intimately, and we're able to really pick up the phone and call you and speak with you. And so if I was in the middle market, I would essentially try to do at least two to three things. One is I would have to cover everything. I would have to have my artificial intelligence, we'll call it platform, covered. I would have to think about where is my niche, where is my area where I can differentiate ever so slightly. And I would have to hold to my customers in the utmost caring, intimate, personalized way.
The way a bot could not.
Yeah.
So I want to do, most of that was a little bit pessimistic and a sort of threatening tone around disruption. I actually want to take a different point of view when I think about how middle market companies can and should position themselves and what their natural advantages and disadvantages are. I think there's actually a reasonable argument that middle market companies are better positioned naturally than smaller early stage companies to manage disruption, and better positioned than very big companies. And why is that? Well, they have more financial and human resources than early stage companies, so they have a greater ability to invest in disruption and exploiting disruption. And they're being smaller than, obviously the biggest companies. They're more agile, or should be more agile. They may not be burdened by the sort of legacy technology and infrastructure that the biggest companies are. So, if they're thinking, if they have a forward-looking view on the world, not being insular, I think they can exploit those advantages to be winners when disruption happens, and be disruptors. It can be, they can be the enablers of disruption. I can, hand the mic over to others, but there's plenty of examples from the world I sit in, the world of financial services and fintech that I think are applicable.
Could we take a minute then and just tell us one of those examples, if is there one that you can talk about?
Yeah, well, sure. So I'll what I do in my business is I lend to early stage digital lenders, digital finance companies who want to grow up in B Capital One or disrupt Capital One. One example where disruption, I believe, is occurring in the world of lending is in small business lending, where historically your typical community or regional bank is they have a bunch of manual processes, underwriting processes, and it's not cost effective for them to make loans less than, say, $5 million. A smaller loan just doesn't make sense. You have to do the same amount of work for a $200,000 loan as you do with a $5 or $10 million loan. Well, now all of a sudden there's a lot of disruptive early stage small business lenders who are using automating formerly manual processes, through digital processes, to underwrite small ticket commercial credit and close those loans quickly. Well, what is that? Getting back to my thesis about, well, how is that good for the middle market? Well, what those small companies don't have, they have a very high cost of capital. So they're good at gathering assets, originating those assets, but they're not the natural end home for those loan assets. So I think smart banks, or some of them, are partnering, starting to partner with early stage small business lenders and saying, hey, they can make a loan more efficiently than I can, but I can more efficiently finance that loan. So I'm going to partner with them and buy loans from those small business lenders. There's a lot of different examples like that where partnering with disruptors and using your natural advantages. And again, I think middle market companies of the financial and human resources that small companies don't, that they can benefit from what's going on in disruption in the lending space.
I think taking the themes that Jim and Anat are talking about, a little bit about middle market advantages and disadvantages, I think there are both. If you're a middle market company, you tend to grow a little faster than bigger companies. Bigger companies tend to be more bureaucratic. They tend to focus on a few sets, and they think they have, they're the big battleship, and oftentimes they have a harder time tacking when the market's tacking, and so growth may be a little slower. I think one of the other opportunities for middle market companies is they are bigger, they have more heft, they have a better ability to invest. And if you look at big, especially publicly traded companies the last decade plus, the percentage of their earnings that they're reinvesting back into the companies has been declining almost quarter by quarter, but it's been a very consistent trend over well over 10 years. And that's because there's more focus on quarterly earnings, more focus on getting the results this quarter, as opposed to necessarily investing in the company and having a longer term view. So middle market companies have potentially an easier time, in particular maybe if they're private, in thinking about the long view, kind of taking Jim's theme, thinking about where the market's going and investing and trying to get a return on that investment. So I think if you look, middle market companies have grown faster in part because I think they are investing more in their businesses than maybe big companies are. And small companies can be very agile. They can find an idea, they can focus on it, and they can try to get it done. But it's hard if you're a small company to be successful longer term, and by definition, you have bigger challenges, whether it's funding, whether it's human resources, whether it's just competing in the market. So I agree, there are challenges, and there's certainly some businesses where scale is really important, and the bigger companies in those industries tend to do better. But there should be opportunities for middle market companies in a number of sectors, I think.
Does it make a difference if it's a family-owned company? Are they more resilient generally, or does it not matter that much?
I think it can. I think one of the trends that we've observed is ownership of middle market companies has been shifting a bit over time, and private equity or sponsors have tended to have a greater percentage of the ownership of middle market companies. And so whether that's a family office, whether that's which has been growing, I think, as a theme, as wealth's been created and family offices are trying to figure out where to invest. But private equity's been taking a bigger share of companies, and that's, I think, helped some companies get a little more disciplined, focus on where opportunities are, and probably created some opportunities if they think there's opportunities to grow by acquisition. If you've got a partner, whether it's a family office, a private equity firm, or somebody else, that gives you another pool of capital that potentially you can tap into to take advantage of opportunities you see that maybe is tougher if it's just organic growth that you're trying to execute.
I do think that it actually makes a difference. I think that we get to see in family-owned businesses that the leadership capacity in these businesses is not evolving fast enough with the changes. And it becomes much more complicated to bring in the talent that you need versus the talent that you have, which by nature of family ties is the talent that you need to make do with. And I think that's somewhat of a hurdle at this point.
So you better hope for having a kind of a geeky cousin somewhere in the tree or something.
At least that. You have control over the business, which you can do things. It's just a question of whether you know what you need to do.
And you probably have to fight against a bit of a tendency to
Conservatism of the family and
yeah,
how you've always
and maybe
done
bring
things.
in extra knowledge and talent and experience
Exactly.
where it makes sense.
Or just avoid being insular.
Yeah.
So a family-owned company, again, dangerous generalization, but still may be more likely to rely on the family. I think it's important that middle market companies or any company, but I think middle market companies are positioned well here to have a defined group within the business that is exclusively focused on innovation and disruption, and thinking about, okay, well, where is the world going? Where is our world going? Where could disruption come from? How can we be positioned for that? I was reading an article earlier this week in the latest installment of Bloomberg magazine, and there was an article that profiled the guy who's effectively the chief disruption officer at JP Morgan. And what he said he does is his Monday morning meetings with his team, and he leads every Monday morning meeting with, hey, if you were a startup and you had $100 million to play with, and you had to spend that $100 million on disrupting JP Morgan, what would you do? And and they think about all the ways that JP Morgan could be at risk, and they come up with solutions for those problems. But the point is, there's a mindset that is focused on being forward-looking in a defined group that isn't within the business line. The business line is managing to the 2017 plan and making sure they hit their numbers, and ultimately, hopefully, in well-run companies, the head of business X within a company is responsible for the strategy of that business. But it's hard to do strategy off the side of your desk. I think you need a defined group that is focused on it. You have to make sure they're not silos, that they're working well integrated into the businesses so that there's a rich dialogue, and with the CTO and the CTO's team as well. But I think, again, middle market companies can be well positioned there because, again, they have the financial resources to invest in having a defined strategy group. And I think the smaller companies have fewer resources here.
I think that's an interesting theme, and Intel's had a number of different leaders over time, but Andy Grove was one of them, and he had a phrase, "Only the paranoid survive." And I think that's a good phrase to think about because, obviously they were a technology company and they transformed themselves a number of times. But it's probably a good analogy in whatever industry you are. If you're not worried somewhat perpetually about what's going on in your industry, what your competitors are doing, how you might be disrupted, you're probably more likely to be disrupted than to be a disruptor.
And if you doubt that, just think of the taxi industry.
Yes.
Actually, I keep imagining myself being at that meeting and thinking, what would would I be brilliant? But it kind of leads us right into the next question, which is which companies, what have you seen, and especially in the middle market arena, that is a really good preparation for either being a step ahead of the change in carving their way against other companies, or else in just preserving their own business? Do you see any kind of practices or ways of thinking that really help?
I think companies that tend to have a forward lens, it's easy to get roped into what am I doing today, how am I trying to make that next sale, how am I trying to work on my existing business. But you tend to get myopic and insular when that happens. And so I think some of the better companies tend to be somewhat perpetually thinking about what's going on in the markets that they're in. And how do they serve those markets? How are those markets changing? What are their customer needs? And how do they best take care of those customer needs? And so I think just that general theme, finding if companies doing a good job thinking about what's going on in the market and then reacting to it, as opposed to basically being responsible for it on a basis where they're responding to what a competitor does. I think those companies tend to be more successful over time.
I would just make a quick comment on at least the issue. Perhaps I don't know if it's a known issue. It seemed to me to be quite known at this point, which is to the point you made about the taxi industry. Most times disruption doesn't come from within your industry. It's very, very rarely the case, unless indeed your Intel, and in some versions of your past life at least, you've kind of recreated yourself, and they did. And UPS recreated themselves as well. But for the most part, people disrupt people from other industries. For instance, Uber is about to disrupt FedEx, right? So you would think that FedEx knows the stuff enough to understand, the world of autonomous cars just traveling around city, shipping things, right? But Uber is coming to disrupt them. And there are endless examples of disruption coming from outside the industry. And together with the necessity that I think you pointed to of just understanding the play field and where things are going within the space, within your industry, and who is investing what, where, and so forth. The ability to scout and understand and connect the dots of what's happening in a different industry, from technology evolution, from moves that you get to see people doing, and how does that translate into your business, is usually what gives you a really nice edge. So if you see that the retail now is employing bots, and you're in the pharmaceutical space, you too have patients calling every day. Okay? They want answers, and they don't want to hold the line. And there can be a nice, sexy little bot there that's going to answer the questions. And so I think that the cross-industry practices and identifying what is cutting edge and bringing it in, irrespective of size of business at this point, is perhaps one of the better ways I've seen to deal with disruption.
Yeah, that's an interesting point, and that rings true to me as somebody who focuses on fintech. I'm full disclosure, I'm much more a fin kind of guy than a tech kind of guy. But generally, what I see is that the disruption, whether it's lending or insurance or wealth management or payments or what have you, is coming from the technology sector. So there are a lot of Silicon Valley VCs and companies that technology companies that are saying, gee, well let's where are there potentially sleepy industries that are ripe for disruption, and they're finding examples in financial services, sort of a highly regulated industry that, the regulation, among other things, can potentially stifle innovation. So that may be where, the disruption is coming from. However, the firms, the incumbents in that industry can embrace that change and benefit from it. Because at the end of the day, again, I gave this example about small business lending. The banks have profound advantages like low cost of capital, for example, and expertise and the ability to measure, balance risk and return and measure risk and that kind of thing. And so they can embrace technology and bring it into the business to make lending, for example, more efficient, or insurance more efficient, more transparent to consumers. They can win. Again, I could give examples if we had another 2 hours to up here. But
I like what Anat was saying, where
Yeah.
often the disruption is not coming from your own industry. And we could probably come up with 100 examples.
Well, you gave one. You led with one. A guy named Jeff Bezos.
Yeah.
Yes.
Exactly.
Well, and I'll give it two more. So Blockbuster, which was in the video business, and for some of us that are old enough to remember, putting in videotapes, it was a big business. It was a huge business, and they were the leader by far. And they've been disrupted by Netflix, ultimately DVDs and then Netflix, and we'll see where it ultimately goes. And Netflix is further disrupting by not just being a distributor, but also being a content maker. And whether that makes sense or not, they're trying to disrupt themselves. Yeah. And then another one is just think about the picture business. And a couple of classic American companies were Kodak and Polaroid. Mm-hmm. And those companies are both gone. Mm-hmm. And they were leading Fortune 100, I think, companies in their heyday. And they were very successful until they weren't. And they got disrupted outside of those industries. So now most pictures are taken, by this. This is where we take our pictures. And you think about that and how you could have forecast that. And if you were sitting in the boardroom of Kodak or Polaroid and thinking about trends, you were thinking about probably Kodak and Polaroid. You weren't necessarily thinking about Apple or the phone industry as necessarily where the source of disruption might be coming from.
So let's talk about, as Jim put it, let's talk about Fin, and then we'll talk about tech. And when we talk about finance in particular, we really are talking about people who are trying to place major bets on where things will go, either on the side of the disruptors or on the side of, or under the assumption that the established industry will evolve, but kind of incorporate and perhaps weather the storm. And middle market companies now have access, presumably, to, as you were saying, to ranges of funding that they didn't have before, partly because of the disruption that is beginning to roll through financial services. And what's the landscape? What's the changing financial landscape, especially for small companies? Are they, how does it enable them, and where are the challenges as well? And,
I'm sorry, for small companies or middle market?
Middle
companies?
market, I'm sorry, yeah. Middle market companies.
Yeah. It's, well, I can talk about areas where disruption is happening within fintech in every sector. I gave some examples from lending in insurance. We have a company in our portfolio that in our venture portfolio that is focused on making the customer experience around choosing an insurance policy more transparent and less scary. So basically this business is a marketplace which provides the consumer provides their profile, and our portfolio company basically provides different insurance policies that might make sense and provides a recommendation. Or in the wealth management world, you've probably heard about robo-advising, where registered independent advisors are being disintermediated. They charge big fees and potentially can have conflicts in the advice they're giving. But now technology is being used to provide automated solutions and recommendations for how the mass affluent, not just the wealthy, should be deploying their assets and the wealth that they have. So there's a lot of things going on in payments that I can talk about as well. I'm not sure if that's getting at your question.
If I'm starting if I've got let's say I have a family business and I've got that cousin, and we're sort of moving into the next realm, and we want to raise a couple of $100,000 in order to, let's say we have a sense of how we have to take our business forward. Do I have options that I didn't have before? Am I,
Well, certainly the early stage companies have options. There's a lot of venture money that is available to be deployed in the fintech space. I was talking just yesterday to a VC here who launched a fintech-focused fund in 2000, and he's still doing it. Back then it was him and one other company that he mentioned. Now there's at least 50 that are focus heavily on fintech in New York and Silicon Valley, elsewhere. So the money is there if you have good ideas. And generally, when we think about where the change is happening, I'd say it falls into two areas, two general problems that are being solved. That there is automation, just more efficient processes that are being put in place, generally driven by digital solutions that have the effect of reducing the overhead, the expenses that go into delivering a product, so reduce operating expense, and enhances the customer experience by just having a more efficient, transparent solution. Again, this is happening in lending, in insurance. I gave examples in those two areas. And then the other example, so that's about automation. The other area I would say would be deploying data or using technology to aggregate data on the customer, whether it's a consumer or a commercial customer, and the ability to use analytics to mine that data to be able to understand better what it is, what products and services the customer wants, and what products and services they should get. Again, to use the lending example, there are examples when you're making an underwriting decision, should I lend or not? Sometimes the decision is using that data to decide who not to lend to. So there's in all these different verticals within fintech, there are companies that are focused on generally using a digital solution or new forms of analytics, like artificial intelligence, machine learning, which is sort of an example under the umbrella of artificial intelligence that are being used to mine information about the customer, so it can deliver a better product to them or deliver a more efficient way of marketing to them, which is really important.
Dave or not? Dave?
Yeah, I mean, if you go back 50 years ago, if you wanted financing as a business operator, you went to a bank. If you wanted financing for your house or your car, I don't think there were that many credit cards back then, but if you wanted a credit card 50 years ago, you went to a bank. And banking has continued to grow over the last 50 years, but financing from other sources at all levels, equity up through senior debt, has grown much, much faster. So that today, if you look at lending, U.S. banking system is about $15 trillion and $14 trillion in assets. And non-bank lenders, which we spend a lot of time, and I know Jim does as well, are almost as big. So, and that's not a new trend. It has accelerated in some respects, and it's been driven for a lot of reasons. It's easier to get global pools of capital where the needs are. And so 50 years ago, if you wanted financing, it came from your community, and it was very local. And eventually you started to be able to go national, and now we can go international. So pools of capital come internationally to where the best investment opportunities are around the globe. So there's more capital, more easily available. Technologies help some of that. I think technology is also helping some platforms figure out where the better investment opportunities are. And so there's probably an easier mirroring of that. And if you look, getting to the fintech world, there's a number of finance companies that are acting as a middleman, truly middleman, between someone who has capital and someone who wants it, whether it's on the consumer lending side or the small business side. And that's kind of a classic adopting of capital that's interested in making investments with users that want capital. And in some cases, they're raising the balance sheet in the middle. In some cases, they're just truly getting paid for being that middleman and originating, whether it's consumer lending or small business lending. And I think another trend, which we had talked about a little bit earlier, was just the whole private equity trend. There's interest in investing in companies of all sizes increasingly, and the private equity world has benefited from that. They've raised funds. They're focused on investing in big companies and middle-sized companies, not so much in small-sized companies, but you could see maybe that developing over time. So I think companies have more alternatives, and it makes it, frankly, that much more complicated to figure out what the alternatives are, what makes sense given what their focus is, what their growth needs are, where, what they're trying to do from a financial perspective with the company. And so it makes the job of the company more interesting, more easy, in some ways easier, but in some ways more complicated.
I have a perspective that's a little, for one, disjointed. One, because it has two aspects to it, and two, because both of them are not fully cooked. But in any case, on the first one, I think if I abstract a little and not just look at fintech specifically as you're directing the question, but just looking at where disruption exists in the world and how is it showing, I think it's showing two ways. One on the front, which is in the relationship that a company has, the business has with its users. And there's disruption there, which by and large is targeted towards personalizing solutions to each one of us. That's the direction. And people are working quite hard to mine the customer data, to fit solutions to you versus me. And I think there's a lot of effort there. And because we can collect data on end users and customers, and because they demand that level of personalization at this point, they is us. There is effort that's going in that direction, and this is where you can win a few points. Then there is, you can also win few points, shall we call it this way, optimizing the back end. And there you get to see efficiencies, you get to see efficient markets emerging, such as how you select an insurance, best insurance for yourself. And there you can have transparency, you can have immediacy, you can have real-time information, and we get to see disruption happening there as well. And so part of where, if you had some money to invest in your business, I think you would need to ask yourself, how am I optimizing my front and my back along these lines? That's part one. Part two is what technology is coming to do, and you can't speak about disruption and take a more of the same view, is it comes and it takes your business, and old style takes 80% of your business, automates it, and render it commoditized. And I think the business of business leaders is to ask the question, what's my 80-20? And on my 80%, so I don't leave money on the table, I should automate it and see if I can extract and milk a little more of that commoditized business of mine. And on the 20% that are hard to automate and hard to AI, how do I add real value and innovate there? And so that I think is the advice I would give. Optimize your back and front, and optimize, your 20% where your value is perhaps a little bit more unique and can linger for a little longer.
Let me offer another. This is really interesting. As you're talking, I'm kind of getting a sense of things opening up. And we've been hearing a lot at Strategy in Business about another idea, and it occurs to me that this may be a vehicle for disruption. And it has to do with the workforce. Middle market companies, large companies tend to have fairly established workforces. Middle market companies need more flexibility. And one of the problems with flexible workforces is that they're in the gig economy. They don't necessarily have security. They're going to have ups and downs, multiple employers. More and more people are assuming that's going to be the way that they live. And there may be opportunities for financing, sort of not so much the employers, but the employees, giving them the stability by, sort of the kinds of insurance that would allow them to put part of their paychecks into some sort of fund for the fallow times that would then give the middle market companies more ability to hire people or hire better people because they can offer, sort of in partnership with their financial upstarts, a better opportunity for lifelong employment or something. It's a flexible, part-time, in and out, lifelong employment.
It's a really interesting idea. It's a very tricky issue. On one hand, of course, it might give some advantage. Together with that, the trend as we see it is a trend towards automation, right? And contraction in terms of how many people will end up really working someplace, irrespective of, and even the bigger firms, you spoke about it earlier, might be big by bottom line, but you can just think about the number of people who work for Facebook with their only 2 billion users, right? And we're looking at a universe of about 5,000 people or less. Mm. So the new generation companies which have digitized themselves are not necessarily large. And the innovation that they require doesn't necessarily need to come from within. And so there are contrasting ideas at this point. I don't know the verdict is out there, but there are contrasting ideas about how are we best serving our companies, our industries, and ourselves. Is it through working someplace and having that level of stability? Or is it through mining innovation from wherever it needs to come, and we each participate in the capacity that we can in fueling that progress?
There was a New York Times article a few years back now talking about the temporary help economy. And it was talking about technology helping and hurting at the same time. It was helping someone who didn't want to work full time. So they didn't want to work a 9-to-5 job. They wanted to work based on their own needs, and they actually were profiling a single mother who needed to work and had young children and needed to have the flexibility to take that child to school and have some care during the day and have some interaction. And so she effectively had, I think they're describing it like 5 jobs. So she got up first thing in the morning, woke up, said, all right, do I have someone I can take to the airport and get paid to take someone to the airport? Then she took their child to school. And then she checked several other temporary help sites, and she acted as a chef, she acted as a handy person, and then she picked up their child and gave dinner, and then checked later on and said, all right, is there people I can drive? So for her, this worked great. And technology allowed her to have the balance that she wanted. But for other people, it's disrupted full-time jobs. That used to be full-time jobs with full-time benefits, and now a lot of these are salaried employees, if even that, and it's actually kind of hourly employees based on how often they're working.
Yeah, I guess my view is, in the year 2017, you got to be able to live by your wits. I mean, the notion of going into a company and one company and staying there for the next 30 years is, I just think that's rare. I hear it not as whispering, it's gone. It's probably a fair statement. You didn't have to whisper. I think having skills, employable skills, and being willing to live in a world where there's a fair degree of white space is important. And if you have the skills, you'll find the right home, and the right companies will find you. I certainly agree with everything Dave said, that and Anat, about technology is helping create flexibility where folks with talent can outsource themselves to all sorts of companies. And you see that happening now, and where there are marketplaces where if we want to, this isn't my area of expertise, where you can hire a programmer or someone to go online and find people who do. I have a 3-hour project. What's your bid? And people bid for that project, and they do it and deliver something the next day.
That's open source.
Open source. So that didn't see that happening a couple of decades ago.
So we have, are we at the end of our time, or we have time for a minute or two? So let's do kind of a lightning round sort of thing, if we may. Okay, I am that CEO of a company, a middle market company, 2,000 employees maybe, maybe 15,000 at most, something like that. I might be an industrial company, I might be a financial company, but whatever it is, I am determined to make it work. Whether, I might end up having to be a supplier, I might end up having to be focused, I might end up having to be broader, I might end up having to be global, local. What would you suggest? And I come to you and say, what do you think? What am I missing? What would you say to me? And,
I'll say to you this. For one, I think that you do not have the privilege to think of yourself as I'm middle market, somebody else is large company, somebody else is small company. There are needs and there are solutions. And the market becomes really open that way and very democratized. It's actually quite easy for the needs to find solutions at very many price levels and options. And so I would almost ignore that definition, shall we say, which to me belongs back in the 20th century perhaps. And I would say to you this, I think that you need, if you want to continue and survive and continue your viability, you need to make sure that you have adapted the technologies that will let you survive. And they involve, like we said earlier, quite a bit of, shall we say, artificial intelligence, and that doesn't come to you through osmosis. So you'd have to appoint people within your company that this is their job, and it'll do you very well if you start to think of yourself as a data company, irrespective of what it is you do. So that you can digitize as much as you can from your business, and or earn your money on what it is you digitized. So just to explain this idea, if I'm a non-digital asset in the world, going into classes and teach, right? I can teach only that very many hours or consult to that very many people, and just about that. If I digitized my services, then I can scale them. So if I digitize the course, or digitize how do you talk about change management and how do you take care of it within your business, then that can perhaps scale beyond my 24/7. And so if I begin to think of myself as a data company where I have customers that I can bring digitized solutions to, and whatever I can digitize, I should go do, and that's a play of technology. So if I'm not awfully confusing, what I'm trying to say is think of your business as a data company, appoint people to digitize as many assets as you can possibly digitize, see how you scale them, and then take a look at what rest is there and do that 80-20 that I thought about or talked about earlier.
Jim, you want to?
Yeah, I guess I'd go back to a couple of themes we've been talking about. If I were advising that CEO, so one, I'd say have the defined group that is focused on strategy, regardless what industry you're in. If you have a forward lens on the world, you can position yourself well. And then, to something else we were talking about, particularly Anat earlier, knowing your strengths and weaknesses, and being prepared to exploit your strengths, and manage the weaknesses. So in the world, again, just a quick example from the world.
I also have to actually add more lightning to the round.
Okay.
We only have just a minute, but
Okay. Well, I'll pass. I think you got the point.
I'll try to be quick. I guess the advice I get is try not to be the Polaroid or Kodaks of the world, and be a company more like a 3M. And without getting it along, and they're certainly not a small company, but they have metrics and focus where X% of their revenue the next 3 or 4 years needs to come from something they're not doing today. And they have a business set on innovation and something new. And so if you're a company trying to think about the world, where's the world going and how do you best meet that? And 3M's, I think, a really good example of a company for a long time that had continually reinvented themselves very successfully.
And with that, we're going to conclude today's discussion. I'd like to thank you all for joining us today, sharing your expertise and your perspective. I'd also like to thank our audience, both those here in person and those online, as well as our hosts here at Capital One Labs in New York City. And as a reminder, you can go to CapXTalk.fora, F-O-R-A.tv, to view a recording of today's discussion. And with that, thank you very much.
Thank you.